Once again, ladies and gentlemen, boys and girls, and children of all ages, you are now tuned in to the Investor Show. As always, this is your gracious host, the Prince of Investing, Prince Dykes, hooking up my microphone here. In 1 second. Coming to you guys and girls live all the way from the beautiful city and state of Denver, Colorado.
Don't forget to hit that like, subscribe, comment, and share button. And as always, I don't have a lot of time. I definitely know you guys and girls don't have a lot of time, so we're gonna jump straight into it. Y'all might see me squinting just a little bit. You know, my I wear glasses to read a good bit, so I was reading a good bit today. And when I got done reading, I took my glasses off with the lights that are behind this and whatnot. It's kind of hurt my eyes a little bit. But anyway, you guys and girls can see we got a very interesting topic today. We're going to go through a look into Warren Buffett's Berkshire Hathaway's 13F report. And the reason why we're going to look at this today, the reason why this is important, because the 13F report, we're going to talk about what it is, a look inside the portfolio, what he sold, what he brought, what is his largest holdings, his cash pile, all of the good things like that. And I really want this to be an educational tool to turn some of you guys and girls into better investors. Something that the path that I got on was learning to read financial data more and more. So you've seen a lot of people say, "Hey, Warren Buffett sold a bunch of his Goldman Sachs, and Buffett's selling everything," and da 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 da. And you're kind of wondering where that information is coming from. That's coming from Yahoo Finance, CNBC, Market Watch, all the major media outlets out there, Fox Business or whatnot. And you open up your phone, you're reading this stuff, you don't know where it's coming. Not you know where it's coming from because it's coming from a reliable source like the financial media outlets, but you don't know where they're getting that information from. How do they find this out? Do they know something that you don't know? But on this show, exactly today, we're going to teach you guys and girls how to fish. So I'm going to show you guys and girls how to fish. And when I say teaching you how to fish, it's showing you how to get this data yourself, right? There's no secret way or whatnot. We're going to go strictly to the Security Exchange Commission. We're going to look exactly what Berkshire Hathaway told the Security Exchange Commission, how to interpret that, how to find that. So today, what you guys and girls can see, we're going to take a look into this portfolio. Why are we going to take a look into this portfolio, Prince? Why are we going to do this? The reason why, because people love to follow smart money. They feel as though this is a $200 billion stock portfolio. So when he buys something, $5 billion of one stock, that moves the whole market. So people love to follow big money. People love to follow smart money. So this is why it's important. Now, how do we do this? We do this with the form 13F. 13F is the form that must be filed every quarter by an institutional investor that has $100 million or more in assets under management. If you have $100 or more in asset under management, every quarter, the company must file a 13F. The 13F is filed with the Security and Exchange Commission. The Security and Exchange Commission is what? They are the governing body over the investing world, right? So they're the police of everybody that's a publicly traded company. So every quarter, this was established in 1975 as to increase transparency via the investing world. Throughout the investing world, they wanted to increase transparency. So one of the ways they want to increase transparency is that every quarter, everybody, all the big firms that have a bunch of money, they must report to the public what they did. Good, great. People are to follow that. People are to see it. People are to look at 13Fs, all of the great stuff. Now, this is the downside to a 13F. The downside to a 13F is old news. It's old news, ladies and gentlemen. I want you guys and girls to know that, right? 1 second here. Got a lot of commenter. Brandon Wilson saying, "Hey, Prince. Hey, what's going on, Brandon?" So if you're coming in live, definitely for the people that are able to catch it live, great on you. How you doing? But it's old news. 13F brings you old news. I'm going to give you the downside, right? Because what we're looking at today, or what we're going to review today, this goes from the first quarter. The first quarter of 2020 was from January to March. January to March is the first quarter. 45 days after the first quarter, which is now March 15th, 45 days after the first quarter, now we're getting to see his portfolio, what he did from January to March. Is that even relevant anymore? Is it even relevant? Probably not. So, prime example, let's say if this big company went out and brought $10 billion worth of Coca-Cola, that's going to make the stock price shoot up. If he brought that today, and the day is March 15th, we won't find out about it until like August 15th, because the second quarter is April, May, June. 45 days after the second quarter. That's like what, August 15th, if my math is correct. So we won't even see what he's doing today until August 15th. So what we're looking at today on the 13F, that's the downside to the 13F is it's telling you what was done in the first quarter. Doesn't mean it's happening today. So when people report, oh, Berkshire sells Goldman Sachs, people act like it happened yesterday, this morning. This is information from the first quarter. We won't know what he's doing today or what a big company is doing today, like Bridgewater, Berkshire Hathaway. There are a ton of them out there. These 13Fs are 45 days after the quarter. So these investment managers, they don't want to tip off everybody what they're doing, because if they buy something, that's going to make the price shoot up. So some of them, they like to keep their mouth hush. The only reason why we knew Berkshire sold all of his stock is because Buffett said it on May 2nd at his annual meeting. When he said that publicly, then everybody knew what was getting ready to happen. So if he didn't say anything, you'll find out on the 13F, and who knows, it's old news. That's big. That's the bad part about it. So some people run around with news acting like it's brand new, but it's not brand new. This is information. We don't get it until 45 days after when it files with the SEC. So pretty much, let's talk about we may not be seeing information until like 4 months after. This creates the herd mentality. When people see, oh, Berkshire sold all its airline stocks, everybody sells the airline stock. I own Southwest Airlines, right? I think it's the only one I got. I own Southwest Airlines. When Buffett said, hey, yeah, we're going to sell all of our airline stock, everybody went and sold them, whether it made sense or not. So the reason why this is important, people love to see transparency. They want to see what the smart money is doing. They want to see what the big money is doing. This is why everybody watches the 13F. So on this show, we're going to talk about exactly how to look up the 13F. So let's take a look. Right? Wayne Sutton says, what's up, Prince? What's going on, Wayne? That's for the live people. So now we're going to take a look. So to take a look, right here, it's the 13F. Well, let me share I'm going to share my screen here. 1 second. Make sure y'all can see. Y'all give me 1 second. I'm going to pull up. Nope, that's the information table. Boom. Nope, that's not it, is it? Nope. That's something I'm going to show y'all later. There we go. All right. So this is what the Form 13F looks like. This came out on Friday, March 15th. This is with the Securities Exchange Commission. I'm going to show you a little bit later how to exactly go through it, how to get to it. But this is Berkshire Hathaway's on from the SEC.gov. So this is telling you exactly what the company holds. So right here it's telling you go down here, and it's in alphabetical order too. That's a nice thing. So right in the first column is going to tell you the name of the company, right? Amazon. He owns Amazon. The second column is going to tell you type of class, common stock, whatever the case may be. That's what the COM stand for. I'm not 100% on that, but I'm pretty sure it's common stock. But I didn't verify that. The QSIT is set as next. That's pretty much like the number that it tracks. You always see it big with bonds, but the number of the security or whatnot. Number 4, column 4, is going to tell you the market value. The market value. How much do you own? Like right here, and this is in thousands, right, or millions. So this is 817 million and 221 million, and in Amazon stock. Column 5 is going to tell you the amount of the stock, how many you own, and SH stands for shares. Now, it could be PRN for principal value, whatnot. And also right here tells you they had a call or put on something or whatnot. And then the investment right here up on the column 8, this tells you, well, this is a sole investment. Did a couple of people get together and come up with the idea? Or was this just one person's idea along with? Column 7 is like other managers. And column 8 is pretty much, did I do that wrong? Column 6, I meant to say. Column 8 is about voting rights. So right here, you can look and see, okay, he owns Amazon, his biggest holdings, right? We'll talk about that a little bit later. But you can see right here, he got some Amazon, American Express. He has Apple, Bank of America, Bank of New York, Coca-Cola, of course, General Mills. This is just a stock portfolio. Has a little bit of Kroger in here. A little bit of Kroger. Has some Kroger. He has $570 million in Kroger. He has $8 billion of Kraft Heinz. The MT Bank is in here. Sirius XM Radio. That's kind of funny. I think that's kind of weird. Sirius XM Radio is in here. Southwest Airlines is still in here. This is as of March. They haven't sold. We won't see this for prime example. This is showing Southwest Airlines, Delta Airlines. These are things. This is because this is showing you a snapshot from January to March. So the next one that comes out in August, I'm pretty sure Southwest Airlines, it should be gone unless they decide to change their mind. Who else you got in here? Suncor, Wells Fargo is in here or whatnot. It's 47 different positions, 47 stocks. This stock portfolio was worth about 270 billion, I think. But I think, due to the market fall, it's worth 178 billion. So, it was worth 242 billion until the market kind of fell. Market failed. 178 billion is what it's worth right now. So the largest holdings, that's the next thing I want to get into. What you guys and girls want to see. Hey, well, what are you holding? What are the largest holdings? What are the largest holdings in Berkshire Hathaway? The largest holdings are Apple, Bank of America, Coca-Cola, American Express, Wells Fargo. That's make up about 57% of the portfolio. So they're the largest shareholders in Apple, the largest shareholders in Coca-Cola, the largest shareholders in Bank of America, the largest shareholders in Wells Fargo, and American Express. Those are the ones that wasn't touched. That's majority of the portfolio is at 57% of the portfolio. Now, let's get into what was sold. What was sold in a particular company? You're going to see here. Of course, we only know the airlines was sold because he said that May 2nd at the Berkshire annual meeting. He sold his airline, he sold some oil, and he sold the travel companies, the TravelX, Travel TRV stock symbol, sold PSX Phillips 66, which oil has been having a hard time. So these are the company that was kind of cleared out, right? So we talked about what he sold, his largest holdings. So it seemed like majority of his holdings is in finance, consumer debt, which has always been big, which is American Express, MasterCard, that type of deal. Consumer debt, finances, things like that, right? Oh yeah, Brandon's comment. He's saying he's commenting live saying Apple, Coca-Cola, yes, consumer staples. So Amazon, we saw in this portfolio, and I'm going to show you guys exactly how to get to a 13F in a portfolio with the SEC as well. So cleared up a little bit on what he sold. So now we want to look at how much cash is laying around. Now we're going to get into the cash pile. The cash pile is 137.3 billion. That's kind of crazy. Last year was 125 billion. This year is 137.3 billion. So why is he sitting on so much cash? Some people take that as a sign of the market is going to collapse. He's waiting to buy, things like that. This is my belief. I think that he would have brought more, but one, the market has so far recovered so fast. Two, the Federal Reserve stepped in so fast. So the Federal Reserve stepped in so fast and started rescuing everybody. Unlike 2008, the Federal Reserve stepped in so fast that people didn't have. I don't think that Buffett and Berkshire even got a chance to buy anything. As soon as we started to decline, Jerome Powell, who's the chairman of the Federal Reserve, came out, started cutting interest rates. Then it was followed by Steve Mnuchin, who's the secretary of the Department of Treasury. He came out and started cutting stimulus checks left and right, bailouts left and right. So you didn't really see a lot of people get to wash out, or whatnot, or whatever the case may be. Wayne says he's still like Delta. Me, I chose Southwest Airline, right? And I'm still holding on to it, right? Because I did the research. I saw the warranties and things like that. Now, the thing that I heard Buffett say, he said, hey, look, it's my belief. It's my belief. No, do not quote and say that I said this, that I know this is not fact. It's my belief that Berkshire probably would have bailed out the airlines. That's my belief because they own 10% of airlines. Like Southwest Airlines got $3 billion from the federal government. But Berkshire, they probably went to Berkshire first, but the government came in and gave away free money pretty much. The $3 billion that Southwest Airlines got from the government, a lot of that was paytection PPP, what was the payroll, the payroll protection plan. And with that payroll protection plan, they don't even have to pay that back. Then another portion was a grant. They only have to pay $900 something million back. So I think the federal government was offering better deals than what other people were offering. That's why companies went with Berkshire's offering. That's my belief. That is not confirmed or whatnot. So why would I go to Berkshire and get a loan at 15% versus when I can go get it from the government for free? That's what a lot of companies, I don't think Berkshire had an opportunity to buy up a lot of guys with great prices like they did. They brought up Bank of America, they brought JP Morgan, they brought a lot of financial companies back in 2008. Right now, a lot of companies did not do that. Why haven't a lot of companies been brought up? Because the government came out and saved everybody. I won't say everybody, but they came out so fast and start giving away stimulus checks, start giving away this, start giving away that so fast that, if I was, imagine for the people that's catching this live in the playback, if you owned a company and you needed a bailout and you got the government saying, hey, we're going to give you $5 billion for, all you got, we're going to give you take me for example. My company has a line of credit for 16%. The government is giving out a line of credit for 3%. Who are you going to take? People are going to go take the 3% interest, right? Now, granted, if it was my business partner, things like that would have been different. But I think that a lot of companies not being brought out or really hitting hard times, the government saved a lot of people. So Berkshire is sitting on their money because, a lot of great deals haven't come up yet because a lot of people haven't gone bankrupt. Airlines got bailed out. Everybody's getting bailed out so fast that it's not giving that great of an opportunity. That's when your money's piled up in cash. So pretty much they have $137 billion sitting in cash, not even counting their portfolio. The stock portfolio is worth 170 something billion now because of the market corrected. So they have a stock portfolio of 200 something billion, then another pile of cash as well. So nice big cash pile to buy some things. So, okay, so Brandon says, so what happens now with the cash pile? The cash pile sits. Last year, Brandon, the cash pile, when I went to Berkshire, I went to his office, when I went to his office, he had $125 billion in cash, right? So that money is sitting in T-bills. So he has it pretty much sitting in a bunch of T-bills, right? Short-term treasury bonds, U.S. government bonds that are sitting there collecting interest until he decides what he wants to buy with it, what he wants to buy with it. So he's making millions just off of interest. If you got 137 billion, what is 1% of 137 billion, right? Imagine if you got 1%. So let's say if you got not even 1%, let's say if you got 0.25, what is 0.25% of 130 billion? I don't know the math off the top of my head, but if I was a guess, that's a couple hundred million, if I'm not mistaken, right? And that is money that's guaranteed off your cash pile. So his money is making money. He's making millions of dollars off of a cash pile that he can just sit there and sit there and wait till it's time to buy, right? So, but that's a sign of, some people look at that and say, whoa, why is his cash pile so big? His cash pile is so big because the market hasn't crashed yet. He's expecting another crash. Everybody try to mimic Warren Buffett. So for prime example, when he said, hey, we're pulling out of airline stocks tanked 10% further than it was already down, just because he wanted to get out. And he felt as though my future profits are going to be paid to the government. The government has his hand in my company and future profits are going to go somewhere else. So he sold it. He may jump back in. Who knows? He sold it for a loss too. Broke the cardinal saying rule of not losing money. So now we went over the largest holdings in the financial companies. Why is he so big in the finances? Because if Bank of America was to fall, who's backing up Bank of America? The Fed. The Feds, right? And what does the Feds do? They just print money. They approved a $2.3 trillion budget and gave everybody stimulus checks. Now they're talking about the House of Representatives just this weekend, Friday or whatnot, just approved another $3 billion. So I don't know if that's going to make it through the Senate and to the president, but they have money backed up to back up the financial system. So that's smart thinking on Buffett's behalf of why he's so big and he's backing the financial companies. Another one, Apple. Apple is like a Fort Knox right now. Apple has a bunch of cash, a bunch of revenue streams, a strong brand that it can make it through what we have going on. Another Fort Knox is Amazon. Amazon is actually trying to slow people down from buying from it. How many companies have to slow customers down? right? And not because they're cutting down on supply that they just have to slow customers down. That's crazy. Amazon is made for this current pandemic, and they're thriving during this pandemic. I did get burned on them because of the call option that I had that expired because of so many people went down because of everybody was expecting, the $4 billion they're putting out due to coronavirus relief. So what was brought? What did he buy? He brought absolutely nothing. That's what scares people. Why do you have a pile of cash and you're buying nothing? Everybody thinks that maybe he's waiting on another crash because he's making millions of dollars off of his cash. He's waiting for another great deal, right? We talked about what he sold. He sold the airline companies, trimmed back on Goldman Sachs. Not sold all of it, but he trimmed back on it. Sold Phillips, sold the travels company and whatnot. A little bit of sale, not massive sales, but a good bit of sales, right? Didn't buy anything, sold more. The 13F, Prince, how do I get to the form 13F? What is it? So here we go. Let's go back here to my screen. I'm going to walk you guys and girls of how to find the 13F. So right here. Sorry about that. Oh, supposed to be a SEC.gov. Sierra Esco, Sierra Echo. I'm having a brain. Charlie. Sierra Esco Charlie. This is the U.S. Exchange Commission. So you go here, and you can go to company filings. Let's type in Berkshire Hathaway. All right. Hopefully I didn't spell that wrong. So you're going to go with Berkshire Hathaway filings right here. This is the top one they have. So right here, it would tell you this was filed on May 15th. Berkshire Hathaway 13F, quarterly report filing, institutional managers, hit documents. Once you hit documents, you're going to go to primary. No, that's the cover page. My bad, I hit the wrong one. Yes. Yes. That's Wesley talking to me. So right here, this is the 13F right here. This is how you get that information. This is what Berkshire Hathaway is sitting in the Security Exchange Commission, open to the public. Any investment manager has over $100 million. They have to turn in one of these every quarter, right? So this is how you can see what big companies like a Bridgewater or whoever may be are holding. And you can see exactly that's how you get to it. So now you don't have to worry about what somebody's telling you about what you heard. You get to get the fresh information. So that's it. 13F. That was a look inside of Berkshire Hathaway. And thank you guys and girls for tuning in. But that's going to conclude today's topic and episode. Pretty good information. Some people like to follow it. I say if you're that big into a company, you want to follow Berkshire, just buy the stock, buy the Class B and forget about it. But if you're somebody that want to look inside to see what's being brought, what's being sold by the big money, smart money, that's the way to do it. All right. Until the next video, podcast, cartoon, whatever else crazy you see me do around the globe. Peace, be safe. I'm out, and thank you.